Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Reality radio for a really great future. We're talking real money.
The show is back. The show is back. I am Don McDonald. Over there is Tom Cock, and we are back again, as we have been pretty much every week since the beginning of time, doing some sort of a radio show somewhere. And this one is called Talking Real Money, and I'll give you like one guess what we're talking about. Just one.
Talking. We're talking about talking.
We're talking about, no.
Oh.
We're talking about real money.
About real?
Tom.
Oh, money. Okay, yeah, makes sense.
It's not a good day for him today. It's been a bad week. He's had technological issues. He's
come on. I have tech issues every week.
He's old.
If I allowed that to...
He's feeling creaky and decrepit.
That's true.
You know,
okay, now I'm going to have to go sit down and take a little nap.
He had no soccer game today.
Yeah, that's true.
You know, and when he's not doing soccer, it's just not right. He's just not right. Nothing's right with the world. Thank goodness he's coming to Florida in March to watch the U.S. men's soccer team lose to Panama. No, I'm kidding.
We're dragging you to the game. You are going to the game, too.
I am.
And you will be wearing the red, white, and blue of
Panama.
Oh, yeah. I was waiting for that. That was too easy.
Panama.
They're the same colors. Come on.
Well,
man.
because, wait a minute. You know the Panama history.
No,
it wasn't even
I remember
a country.
That they got a canal.
It wasn't a country until we said, "Oh, we're taking this from you, Colombia. It's a country now."
And we're going to dig this trench here so we can.
That was back in America's brief period of global imperialism compared to the Brits and the French. It was brief, and the Spanish and Portuguese. Right. Hey, welcome to our little get together where we try to talk about money, not Panama, not soccer. We do talk about a lot of other things too, but mainly money at 855-935-TALK, 855-935-8255. I have finally, Tom, gotten around to reading 8 Days in May.
Yeah. Did you like that? I thought it was a great book.
Really enjoying it. It's about the end of World War II. And, you know, every time I read a book like that, I go, why in God's name would anybody want to start another war, Vladimir?
It is shocking, the amount of displacement, the amount of pain, the amount of suffering from all the people that are getting away. You know, and this has come to the fore this week because more and more people are asking us about, okay, it looks like this is maybe going to happen, maybe not going to happen with Russia and the Ukraine. So we got a text this week. Any guidance if Russia attacks Ukraine regarding portfolio?
That is, and you know, funny, that question has a familiar nostalgic ring to it. I remember right after 9/11, I got that question so many times on my old Don McDonald show. What is going to happen to the stock market when the war starts in Iraq?
Yeah, what happened?
The day the war started, the U.S. invaded, the stock market soared. Didn't plunge, went way up.
Because weapons makers were doing so
well?
No,
it went way up. It went way up because the anticipation of the event was so intense. We were wringing our hands. We were so worried, just as we are now. And we're worried for a number of really good reasons. But this is the problem. We forget that we're not the only one who knows this stuff. It's not like you are the only one who read the newspaper and realized that Russia might invade Ukraine and that would cause global natural gas prices to rise, for example.
And I know many of you would call your advisor with that same question and ask them, and what would the advisor generally say?
Depends on what kind of an advisor you have.
Ah, there you go. Because if you're working with a salesperson,
a commissioned
stockbroker, commission, guess what they're going to say? Oh, yeah.
Yeah,
you're right. We are getting out of that.
We should move into something safe right now.
That's
and
right.
wait to see what happens.
Yeah.
We'll know when the time is right to get back in.
which of course they won't have any idea.
Because they're compensated on transactions. So they need transactions. And any excuse for a transaction is a good excuse for a transaction. But what is really likely to happen, and how should you invest for events like this? Bad things that happen all the time. Stick around. 855-935-TALK is our number. Call us, please.
Tom and Don are talking real money.
At some point, most investors need professional financial guidance. So get a little bit of free help or a lifetime of affordable 100% fiduciary guidance at Vestory.com. Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Well, hello and welcome back. We missed you over that break. I hope you stayed. Did you stay? Okay, good. Hi, Don here, Tom there. We're talking about, well, expected events and their impact on your investments. You see, most events are expected. Right now, there's been, for months now, talk of Russia invading Ukraine and what it would do to Europe and what it would do to Russia and what it would do to the global economy for a while. And you are not the only one who knows about this. I hate to tell you, but probably a few billion other people already know. So that makes it built into the market.
The price, in other words, is adjusted for whatever people believe right now. And by the way, there's just not one opinion. Some people still thinking Putin may or may not
and that's not the thing. It's just that it's like it's a possibility. So they're going to build the possibility into prices today.
Okay, but let's assume he does invade.
Okay.
What would you do with your portfolio as a result?
Thank you. That's the whole ball game right there. What would you do differently? Now, I can tell, I hear some of you answering, I'll get out and I'll get back in when it's better.
Mm-hmm. Yeah.
How do you
Let
do
me
that?
put it another way. Let's assume, just for a moment, if you will, that Mr. Putin instead signs a non-aggression pact with the entire rest of the world. He says, I'm not going to invade it. I'm not going to do anything. Number two, that growth in the U.S. economy is, that 4 to 5% amount. Okay. And inflation is at 3%. So we're growing faster than we're inflating things. And I know this one will come complete surprise. Both parties in Congress agree on a major piece of legislation. Let's assume all those things. Just for a moment.
No, sorry, that all. You've just taken it way too far-fetched. Now this is like science fiction now.
So what would you be then selling things that are less risky and buying more riskier ones? If that were true?
Yes, I would. Yes. If I knew that all those things were for sure going to happen.
Here's the problem.
Yes.
Somebody else already knew all those things. Well, that is, as you said,
it's
recently,
baked in the cake.
It's already in there. I mean, the prices are adjusted. Remember, prices are adjusting. They're not waking up and reading the Wall Street Journal at 10 o'clock in the morning. That stuff's all already done. And the fact that so much trading is done by institutions and large funds, the odds of you getting in there somehow and adjusting something because this is happening are basically impossible.
And
impossible.
Just because the New York Stock Exchange opens at 9:30 Eastern and closes at 4 p.m. Eastern doesn't mean that trading stops all over the planet. It's going on all night, everywhere, all the time.
That's right. So let's just
well, then what's
close
the solution?
The loop on this. The solution.
I need a solution.
Because we can talk about the other sort of crisis du jour, if you will, about interest rates in a moment. The solution is your portfolio is designed for you. It has nothing to do with all these external factors that this one will eventually end one way or another. There will be another problem. It might be North Korea. It might be China. If we're talking about the rest of the world, whatever it is, it'll come along. And your portfolio will already be adjusted for that. There is no moving in and moving. Oh, that's no, except the one fund you have, Don, the short, long XLR, whatever fund that adjusts all the time.
Yeah. And the one with all the leverage and
You're all good with there.
That costs 3% per year. I'm a big fan of 3% per year funds.
Just a little over 3. It's not a big deal.
Not a big deal, no. Yeah, of course I have lots of those funds.
So the thing is, we're being facetious there. you already have a portfolio that's constructed for the rate of return you seek, the volatility you're willing to accept, and how soon until you need the money. Other than that, you're not paying it. You can pay attention to this stuff, but it's not impacting your money on a day-to-day basis.
Yeah, and that's where we really get caught up in some real financial stupidity. We start thinking, and it's because it's more fun. It's more fun when you watch the news and you go, oh my goodness, you talk to your friends. What are you going to do with your portfolio if Russia invades? What are you going to do? No, it's not what if when. It's what were you doing before? Had you built the right portfolio for all weather, for all events, for all possibilities?
And here's the thing about that. We can tell you that. We've told you that for 20 plus years.
So boring.
No, but we can tell you that, but the next crisis comes along, people will still ask me. I guarantee it. They'll say, well, what should we be doing now? Because this is what's happening, and I got to do something now.
Because times are different, Tom.
Yeah, it's different.
This time it's different. Yeah. It's a new paradigm.
The virus, other than the fact that we had the same thing happen 100 years ago, but it was different this time. The world will never come back, which, depending on which source you believe, it may be coming back as soon as next month.
There is no trick to this. That's the point we're trying to make, and we will continue to make because we know you're not going to get it. Sorry, but you're not going to get it because we keep hearing from you, and we'll probably hear from someone today who will say, I've got a bunch of money, and I just, I'm worried about the situation in the world right now. What should I do with it until then?
By the way, don't feel alone there. We just talked about this last week. There's about $18 trillion like that.
Yeah, just sitting around.
Waiting.
Just sitting there waiting to be invested. And I mean, I know I got a few bucks in a savings account connected to my Bank of America checking account, which I probably shouldn't have, but I do because, I've got to buy my car out of the lease and stuff like that. And it's earning like 6 basis points.
I think that we did read that was the average savings rate or savings
it's
payout.
It's non-existent money. I am losing every single day that money sits there. I am losing money, and you are too. And I know it feels safe, but it's not. When inflation's eating it away, that is a true risk. And there's no trick to this. You just have to do all the things.
There is a trick.
Well,
there's an emotional trick.
The trick is to do your work, to do your homework before you invest, to know yourself and know what you need that money to do for you before you ever do a thing with the money. That's one of the biggest problems.
And the other trick is the emotional side. Managing to tell yourself that you don't care your money is already set. It's there. Your portfolio is properly constructed for good and bad. And everything that comes along, it may seem like the end of the world. It may seem like the biggest crisis since whatever. You need to learn to ignore that. You have to tune it out. You have to just say, I don't care, because in the long haul, you're going to look back and say this was not as big a deal as it seemed at the moment, which, as we all know in our lives, many things seem very big, but then you look back and say, I wish I hadn't gotten so worked up about that.
Yeah, and as John Bogle once said, as far as that's concerned, as far as the emotional component of this, the key to that, he would always say, don't peek, don't peek, don't look at your portfolio, particularly in periods where you're hearing on the news that the market is way down. I mean, I'm going to peek at mine just so you don't have to. And, I look at mine and I see a couple $1,000 loss. And that's, you look at that and you go, oh, wait, I just lost like a paycheck. But it's temporary.
Yeah, and the global portfolio year to date is only down 3.5%. While the S&P is down more than that. So
that's another topic. We do need to talk more about that, about the true power of diversification. 855-935-TALK.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
For your real life and real future, Tom and Don are talking real money.
It's the Money Show. It's called Talking Real Money. It's not the Money Show. It's called Talking Real Money, where we talking about real money. At 855-935-8255. 855-935-TALK. We've got lines for you. You can tell because we're not taking any calls. That's how you can tell. If we just ramble on for a while, you didn't call. Because we go right to calls most of the time. Unless it's top of the hour and we're setting something up. But
Top of the hour
to you.
No, and the only reason I'm laughing is because I told that to my daughter when she's like, what is top of the hour? What does that mean?
That's a broadcaster term.
Yeah, well, it is, and in today's digital world, it has no.
That's true.
That means
That's
nothing.
True.
I mean, sweep hand, top of the hour, none of that.
Right?
Stuff.
Do you have any sweep hand clocks around your house?
Not here. We have one at work though. I love that thing, but it reminds me of my school days.
I have a sweep hand on a little tiny digital thing in my studio because I prefer it. I prefer when you in radio when you are trying to get into a break, you back time. And so you're watching that, and there's something about that smooth movement of a second hand.
Rather than giving the seconds.
Yeah, that allows you to take it right to the point where you're out, and I just prefer it.
You brought up diversification. How about asking people
because
about this?
what's the S&P 500 down
The
right
S&P
now?
500 is down 8.6% year to date. 8.6. The 100% global portfolio, that's where you own a lot of other things other than just large U.S. firms, is down 3.6%.
So wait, that's very interesting. So it's down less than half.
Oh, yeah.
So
right.
It's a substantial difference.
Here's why. International value, crummy companies in risky countries, they've made 5.7% year to date. Emerging market value, same sort of thing. I was being a little silly. Very risky firms in not troubled countries, in, economies still developing. By the way, the United States of America one day was a developing economy.
And may one day be again. Who knows?
And those are up 3.7%. U.S. small cap value has made a little bit of money. So a lot of parts of the market have gone up. And this is something we do spend a lot of time talking about because you really only, if you listen to the financial media for the most part, hear about the Dow Jones Industrial Average, the NASDAQ, or the S&P 500. Pretty much.
Wouldn't it be wonderful if you could turn on the radio and at 4 minutes after the hour during the national news, they go, and today the 60-40 portfolio is is down just 0.5% for the year. So you guys who diversified, you're fine. What is the 60-40?
By the way,
do you have a 60-40?
Yeah, I do. It's down a whopping 2.7% year to date.
So, if they said that, your 60-40 global portfolio is only down a little over 2% this year, don't you feel better?
You do. I mean, intermediate bonds, this has been one of the issues, which we're going to talk about a bit next hour. Those bonds are down.
Next hour or next podcast.
Pardon me. Next whatever. Next millennium.
Next episode.
3%.
Let's do that.
Next episode. Thank you. They're down 3% year to date. So bonds have lost a little bit of money. Stocks have lost. I guess it is time to panic pretty much now that you mention it. Stocks and bonds are both down.
Okay.
I'm going to run out of the house screaming here in a moment.
Ladies and gentlemen, I want to introduce you once again to
with whatever I got there.
to Senor Facetious.
Sorry. Yeah. No, I'm kidding. Yes,
yeah,
okay.
He's kidding.
Senor Facetious. Can you spell it though? Is that a PH?
No, that's an F.
Okay. See, I didn't know.
F-A-C-E-T-I-O-U-S.
Oh, that's right.
Facetious.
Look at you. Yeah. And by the way,
I didn't do my Wordle today.
I once told one of my daughter's teacher what a good speller I was and how that was indicative of, of intelligence and education. She said, there's absolutely no correlation between being a good speller and being a good student.
In my mind, there
which
is.
Kind of hurt. I know, kind of hurt my feelings a little bit. So at the end of the day, you should be diversified. Yes, because with your stock portfolio, you should hold thousands of equities rather than just 500. That has meant a smoother ride and just a little bit more return. And also in times like this, when you can look at your portfolio and say, wow, I'm 60% in stocks, 40% in bonds, and I'm down 2.5%. Big deal. Who cares? Which really is no big deal. You should not care.
Yeah. I just started my Wordle, and I didn't get a single right letter in the first try. Not one. Oh, man. This is going to be a hard one. Since the New York Times took it over, I think it's harder. Yeah. All right. I'm going to work on that during the break. 855-935-TALK is the number. We'll be back.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
Reality radio for a really great future. We're talking real money.
I hate Wordle now that the New York Times took it over.
Well, you did go through a bit of a progression there.
I did. I had the first letter, the third letter, the fourth letter, and the fifth letter.
Yeah,
and
easy at that
I
point.
went through with the second letter multiple times, 4 times, and got it wrong every time, leaving me for my very first time with Wordle ever not getting it.
If I had a sound effect of tears or something or crying, I would play it right now. Yeah, that would be good too.
I'm leaving you to do the rest of the show because I'm too depressed.
Depression then set in.
I can't. I'm sorry. I take this stuff so seriously. 855-935-TALK is the number here. Give us a call at 855-935-8255, just like Michael did. Hi, Michael. Welcome to Talking Real Money.
Hello.
Michael?
Can you hear me?
Hello. Yes.
Hello?
Yes.
Hello.
Yes.
Yes. Hi.
Hello.
Thank you for taking my call. Hello. And the subject of the question is, I'm 46 years old. I've invested in the last 5 to 7 years and noticed basically about a 20% growth, what seems to be a 20% growth every year. The last couple of years, I've gotten a financial advisor, and we diversified the account, and I've got an 85-15 kind of breakdown, if you will, and with about a 50% split between U.S. and global, basically, those funds. And so what I'm basically curious of is, because I'm so, I haven't done it for 30 plus years, I've only done it for the last 5, the ratio spread, it seems to be that I've lost somewhere in the neighborhood of about 15% so far for the year. That kind of thing, it seems like that. If I looked at it daily kind of a thing. But over the course of the year, I know it's all going to weigh out, and I really don't need this money for another 20 years. So it's not really that, I'm not concerned about it, but I'm just kind of curious.
Can I back up just a sec? I'm sure. really, truly curious because I'm having a hard time wrapping my head around a portfolio that lost 15% in 2022 so far, 6 weeks. What's it in? Give me some names of some of the products it's in.
So basically, let's see, 80% of it is in the American funds, and American funds growth, the growth fund of America.
Yeah. Okay.
And the income fund. It's not income fund, but it's the bond. There's
now.
About
When did you go into this portfolio with this advisor? A term I'm going to use very loosely from here on in.
Because they're selling you commission products. That's why.
Yeah.
2 years.
Let me tell you a couple.
No.
Yes.
No, actually, no. This particular advisor wanted me to get out of American funds, that kind of thing.
And
basically, I've chosen to stay with them because.
What does this broker want to get you? What do they want to put you into?
Invesco.
Frying pan to fire. He wants to get another commission. Oh my God.
Yeah, exactly.
Okay. Oh, you got a bad advisor. You do?
Okay,
but let's go back to your question just for a moment.
You do?
Yes, I believe with that type of portfolio, which is probably
Growth Fund of America is down 15% for the year.
Yeah, that makes sense because it probably has a lot in those issues that have really gotten beaten up. Big technology, right, which went way up, and now they're going down faster than everything else. So I'm not surprised to hear that. And I have no idea what the other fund at Invesco may have done with a similar portfolio, because any portfolio that is overweighted that way to those big tech firms has taken a beating.
Sorry, I'm crying on the table. You have to take it to the break. Wow, Michael. You went literally from the frying pan to the fire with your choices.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Don McDonald is sending out the SMH all over the world.
Shaking my
right
head.
now.
I don't know why you like that SMH thing. Nobody knows what you're talking about.
I sound cool. That's why.
You do not sound cool.
Well, they're my daughter's friends. I know.
No, you don't. They're going, why is he doing that? It only works if we do it.
Okay, I see.
You know, because you're
and
old.
I know a couple lyrics from Taylor Swift, too. Does that help?
No, that really, really makes it worse. That just makes it so much worse. All right, here we go. This is a message for Michael. Michael, please listen. And I know you won't want to listen because most people don't. We hate to admit we make mistakes. We hate it. But let me tell you, you made your first mistake when you went to work for somebody who sold you the heavily loaded American funds, Growth Fund of America, Income Fund of America, et cetera, which have 5 3/4% commissions and expense ratios that are about 10 times higher than a well-diversified Vanguard equity mutual fund.
Or fill in the blank. I mean, everybody has a fund like that now.
Then you go to a new advisor, and I'm thinking, yay, you got a better advisor who's going to give you better stuff, and then you argued with him. But no, the advisor you went to wants to move you from funds on which you have already paid a commission into funds for which you will pay another commission. And I don't care how he couches it. Oh, no, the funds that we're going to sell you don't have a commission because they're C shares or something.
Well, no, the funds are so good, they're going to make up that difference over time.
Yeah. Michael, here's the deal. You have salespeople. These are not financial advisors as much as they would like you to believe they are. And I am confident that the reason this is going to upset you is because your broker, your salesperson, is one of two things, either so nice or a dear friend or family member.
Okay, and back to the portfolio for a moment, because we did look at that, right?
It's awful.
Well, here's the reason. Because it is very weighted to the top 5 securities, which make up
the hot
almost
stuff.
1/4.
They just went out and bought the hot stuff. Yeah, they just went out and bought what had been hot.
Yeah. Make up 1/4 of the portfolio. So again, while you say you're diversified and you may well hold other things that do have some diversification in them, the fact that you hold this fund means that you have a concentrated position in large U.S., especially technology firms, which is not a way to manage money.
And this also points up the problem of actively managed mutual funds, because the American Funds Growth Fund of America has $250 billion in it.
Wow.
That is a very big fund, which means that the only way the only stocks they can really buy and sell at that size are gigantic companies. Otherwise, they end up owning a controlling or a reportable interest in the companies, and actually in some cases even controlling interest. And so therein lies the problem. You need to find a new advisor, and you desperately need a 100% fiduciary advisor. You should, if you want to test your advisor, go to talkingrealmoney.com, download the advisor interview form at talkingrealmoney.com/help. Take that to your advisor, and there's the air quotes on either side of my microphone, and ask him to fill it out and sign it. Bet he won't do it. 855-935-TALK is our phone number. Jeff, you're next. Welcome to Talking Real Money.
Yeah, Jeff. I'm Jeff. Anyway, hey, I appreciate
you can be Jeff today. I'll be Don, and he's going to be Tom.
Hey, sounds good. I've been listening to you guys for a few years now, and this is the first time I've called in. Anyway, my question is kind of simple here. I'm a little bit worried about my credit, and I want to freeze my credit. Herb Weisbaum on TV. You know, Herb Weisbaum has mentioned you just go onto those major credit sites, log in your Social Security number, and you can simply freeze your credit. But anyway, I'm not real trustworthy on my computer. I'm not real comfortable typing in my Social Security number on my computer, to freeze my credit, which I've never done before. I'm worried about identity theft. And I'm wondering, is there any other options? Can I go to my bank and go?
Nope, but there are other options. There are other options. Here is the biggest problem, particularly in today's economy. Have you tried to call anybody these days?
You mean I'm
businesses?
Not sure what you mean.
Well, like if you try to call an airline, you'll be on hold for like 33 hours.
The flight is left and returned.
You try to call tech support for a company. It's like, you're number 35 in line. Please be patient. You can call Equifax, Experian, and TransUnion on their toll-free numbers. That's the only other way to do it. You can either do it online at their websites, which, by the way, is incredibly safe. Because if you're on your computer, let's say you're in your web browser on your computer. What kind of computer?
I have a Hewlett-Packard.
So you're on a Windows machine. Okay.
Yes, sir.
So you go in, let's say you go into Google Chrome. Let's say you're using Chrome. And you go to Experian.com. Okay? When you go to Experian.com, look in the upper window of your web browser. Okay. You will see a locked padlock, a picture of a locked padlock.
Right, and I know what you're talking about. You think that's trustworthy, even though my computer has Trojans? I have like
nope, because that site, everything you type is being encrypted with this incredibly sophisticated encryption algorithm.
Okay.
So everything you type is going to go on. Now make sure, a couple of things. Never, ever, ever, Herb will tell you I'm right. Never, ever, ever do this on a public website. Ever.
Okay.
Make sure you're on your home internet.
Right, home internet, okay.
Okay? Or you can do it on your phone, by the way, more safely, because T-Mobile, Verizon, and AT&T all have encryption on their cells. But the safest and easiest place is to make sure that you do it at home and you hit that, make sure that little lock button is on. And then I can tell you, I have entered my Social Security online, Social Security number, hundreds and hundreds of times.
Okay. Let me
safe.
ask you this, sir. Now, my computer, as long as I see that little padlock, and I'm understand what you're talking about. The little padlock indicated it's a secure site. Even though my computer, has germs, worms, I'm not updated on any virus stuff. I'm not updated on all that. But if I see that little padlock, I can be pretty confident that when I type in my Social Security number and freeze my credit with the big three credit people, you think that'll be? You're pretty confident that will in fact work and freeze my computer.
I am right at 99% plus confident. Now, the 1% is very unlikely, unless you have somebody who really dislikes you and has had access to your computer, and they went in and put a keystroke logging program on there. But they would have to get into your computer to do this. And unless you're a spy or, high up in some corporation where there's a little intrigue, you don't have a keystroke logger on there, or unless your wife thinks you're cheating or something. So
I like your confidence, sir.
I'm very confident.
Right. Okay. I think I'm going to do this then. Now I'm on a landline. Say I went into their phone number and I actually called. I was put on hold, but I actually literally got voice-to-voice communication with somebody. I could do it that way too, but then I'd have to say my Social Security number over the phone.
Exactly, and somebody could overhear it. It's like we're okay mailing stuff in the mail, but do you know how easy it is to steal your bank account number from a written check in your mailbox? We worry too much about online. Online is actually really safe unless we do something stupid.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
For your real life and real future, Tom and Don are talking real money.
Okay, here's the deal. We know a lot of you need help. We do. Maybe not full-time help where you need to hire an advisor, but some help, like Michael. You know, if you had set up an appointment with one of our advisors at Vestory, we would have sat down and told you, here are the problems with this. And that is something that can take some time. And there's a relatively easy way to do it.
And all you have to do is go to Vestory.com, set up an appointment at a time that works for you. We need some information from you. We analyze that, and we give you a full report. Go to Vestory.com. Sign up for your free meeting with an advisor.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.